Now it's time to delve into the exciting world of 401k. I've mentioned in the past that 403b and 401k are very similar in a number of regards, but today I want to talk specifically just about the 401k plan. It's more common, it's more prevalent throughout the United States, so we're going to focus on that one today. I happen to have this handy little chart here illustrating different types of 401k plan players. So these are people and organizations that interact with your 401k plan. So you, the individual, you're the participant, you might set up a 401k account within the 401k plan. So you have investment dollars going in. What you may not know is that there are a bunch of other people who interact and make the plan work. I'm going to start at the high level. We have the Department of Labor. They periodically take a look at the 401k plan to make sure that it is being run to the benefit of all employees. They want to make sure, for instance, that the plan isn't specifically just for the benefit of one group of people at the detriment of another group. The IRS has to decide that it's a good plan and that it's reasonable and fits certain factors and criteria in order to be able to get a tax-sheltered account. They don't just allow any old account to be tax-sheltered. Got to do it right. Down here is your employer. And maybe that's you. If you're self-employed, this applies to you as well. That is an awfully big building you've got there, being self-employed. Good for you. So from there, we have a number of different groups within the company. We've got human resources, the owners of the company, and some of the folks that run it, that run the 401k plan from within the company and interact with it on a regular basis. So the payroll department and human resources are going to organize for the money to come out of your paycheck and go into your account in 401k. Once that happens, you're tax sheltered, and that's a good thing. Between that happening and when you experience it, a few people get involved. So there's what's referred to as a custodian. That's where the money goes and they hold it. The company who acts as the custodian is probably a big brand name that you've heard of. Most often that's the case. And they do the transactions. So when you go online or use a mobile app and say you want to trade some mutual fund for another one, or you invest some more dollars, those sorts of things, custodian is typically the company that you're interacting with. But there may be what's referred to as a third-party administrator. Some plans have a separate company that stands alone. They're independent, usually, and they don't have a connection to the custodian. They do some administrative work. They make sure that the plan is up to stuff, that it's running well. They do the tax reporting, and you may have some interaction with them. It's more common for the company to interact with them, but sometimes you may see their name on some things. They're referred to as a third-party administrator. You also might have a broker or an advisor. So that's something like an insurance representative might come in and suggest a certain type of 401k plan or custodian and say that they're good for these reasons, and I really think you should use that provider. We call them a provider, where the 401k plan is. So the 401k plan is held by a custodian. The broker says, hey, it should be here, or sometimes they step in and say, you know what, I think we should move the plan somewhere else for certain reasons. If they're a broker, you have to be careful about how they get paid, because sometimes they don't necessarily have to act in your best interest or even best interest of the plan. They can be making some suggestions that might line their pockets. That's a big focus, and it's a big concern of a lot of places like the IRS and the Department of Labor and lawyers, etc. Once the plan is set up, or actually in the process of getting set up, you have legal. So legal steps in and they're going to create a type of plan that hopefully gets the IRS approval. You also have accountants. So sometimes they may step in. So most plans, not all of them, are required to do an audit. And the audit will, the accountant will take a look at the 401k plan and determine that it is appropriate, and they'll generate a report on it. Those reports, here's a little known secret, those reports become public knowledge. Anybody can search them. Through the Department of Labor website, you can pull up the IRS tax filing. It's called a Form 5500. So wherever you work, what you might want to do is every once in a while step in and compare that statement that you get, typically once a year, or the documents that you receive from the plan, also referred to as a summary plan description. Throwing a lot of terms out there. Feel free to look any of them up. Call us, call your broker or advisor, call the insurance company, call the custodian or the provider of the plan, and ask for more detail. It certainly can't hurt to gather more detail. But all these folks all come together, and over here, it's a little standalone, actually probably should be off here somewhere, not even on my handy little back of the notepad here, is a plan advisor. That's what Plan Partners is. We don't have any connection by design with any of these. We don't receive any revenue, so no money kicks back, no axe to grind, no affiliation. We're not connected to any of them. I've actually done some work with the IRS Outreach and Education group. I've traveled the country and spoken and done some educational content on workplace retirement plans. That was an unpaid activity, but we stand alone and we just make sure that all of this stuff makes sense to the company. So when we get together at that boardroom table that I've talked about in the past, we can come in and answer all those questions, and they can know, since we have no affiliation, that they're getting the right answers and they're getting good answers from us. And just like everybody else, we're what's called a covered service provider, and we give a disclosure saying, here's how we get paid. And the fact that we started as fee-based 401k and we do flat fee makes life simpler and easier for really everybody, including us, but most importantly the company, because we're able to give them, it's effectively a blank sheet of paper, and say, here's our disclosures. We don't have any conflicts. And that leaves us in a good position to help navigate all these. And last thing, because we're independent, we can go into places like the custodian or the provider, the groups that do the trading on the plan, the groups that that provide services to the plan, and negotiate those fees. We want the fees as low as possible and the services as robust as possible. Somebody who's conflicted doesn't really want to do that because they might impact their revenue. They might make less money if they go in and do a really good job of getting fees low. So that's our role. That's where Plan Partners comes in, and that's a bit of a deep dive into the 401k plan. I hope you found that insightful, helpful, maybe get you pointed in the right direction. As I said, jump online and find more resources and do some searches if you want.